Hello, everyone. My name is Laura Beckerman. I'm an Assistant Attorney General with the Office of the Attorney General, Office of Consumer Protection. Thank you so much for joining us today. On behalf of OAG and DISB, we're really delighted to be able to bring you this program with the Student Borrower Protection Center. So OAG works with DISB to handle and review complaints about student loans and handle and look into ones that show a pattern and are rising to the level of needing investigation. I'm joined here with my colleague, the Director of the Office of Consumer Protection, Ben Weisman. And next, I will turn it over to Ricardo Jefferson from DISB to speak a little bit about what his office does before we then turn it over to the Student Borrower Protection Center to get started. Ricardo, take it away.
Thanks, Laura. Good afternoon, everyone. My name is Ricardo Jefferson. I'm the Student Loan Ombudsman, and I work for the Department of Insurance, Securities, and Banking. I am very delighted to be here with you all today in collaboration with our partners at the Office of the Attorney General and also the Student Borrower Protection Center. We are, as your Student Loan Ombudsman, I'm here to support you and your families on matters related to your student loan, but also to access resources for college education. So please remember me and look me up at DISB's website. You can also email me at dcloanhelp@dc.gov. I won't go too deeply into all the services that we offer today and how I'm here to help you, but I do want you to know that have that top of mind, that I am here to support you and your families on matters related to your student loan debt, and also in all matters related to going to pursue a post-secondary education. Having said that, I'm going to introduce our main presenter today, who is Winston Berkman-Breen. He is the Deputy Director of Advocacy and Policy Counsel at the Student Borrower Protection Center. And he's going to talk to you today about the Public Service Loan Forgiveness Program, as well as the one-year limited public service loan forgiveness waiver program, and a few matters related to return to repayment. Thereafter, I'm going to talk to you a little bit about a program that I have upcoming in February, and we're going to reserve a lot of time for your questions and answers, because I'm sure you have many. I'm very, very happy to have Winston with us here today, and I'm going to turn it over to him right now. Winston, it's all yours.
Great. Well, thank you so much, Laura and Ricardo, and good afternoon, everyone. Thanks to the Office of the Attorney General, to DISB for organizing this event and for inviting the Student Borrower Protection Center to participate. So as you just heard, so I work at the Student Borrower Protection Center. It's a national nonprofit policy organization. We're solely focused on ending the burden of higher education debt for working folks across the country. What we're going to do for the first half of this hour together is I'm going to give a presentation about the public service loan forgiveness, about some current and time-limited changes to the public service loan forgiveness. As Ricardo said, some things to keep in mind as the payment pause ends for some folks currently scheduled for May. And then I'm going to hand things back over to Ricardo to share about his program before we have plenty of time for Q&A. So I'm going to start by sharing my screen. All right, so there we go. Okay, wonderful. So what we're first going to do is I'm going to give a quick overview of the program, Public Service Loan Forgiveness Program, as it exists generally, and then talk about some of the changes that are currently in effect. I'm then going to walk through, sort of lay out some steps that each of you and anyone can take to sort of get control of your loans, take advantage of the current changes to the Public Service Loan Forgiveness, and then show some screen shares, some screen grabs of how to take those steps, right? Like, how do you actually act on the advice that you're going to be getting today, in addition to following back up with Ricardo or with the Office of the Attorney General. So it might seem a little repetitive at times, but I really want to make sure this is complicated stuff, and that that folks are able to walk away having learned something, and with a couple of specifically 3 things that they can do to get control of their loans. Okay, so with that in mind, we're going to get started. So public service loan forgiveness, for those who aren't familiar with it, public service loan forgiveness was created by Congress in 2007, and it is a program to help public service workers who are struggling with their student loan debt, and also to make sure that future graduates can enter public service and aren't going to be held back by their loan balances. Put simply, the Public Service Loan Forgiveness, or PSLF program, is the promise that if you work in public service for 10 years, after 10 years, your student loans will be forgiven, your federal student loans. It's a little bit more complicated than that. And in the next few slides, I'm going to talk about the actual program requirements and what it takes to be eligible, but that's the general purpose and intent of the program. So how does PSLF actually work? It's not just about working in public service for 10 years. There's actually 4 specific criteria. First, and I'm going to summarize each of them, and then we're going to drill down into each one of them in the following slides. First, you need to have a direct loan. That's a very specific type of federal student loan. There are other types, so you need to have a direct loan. Second, you need to be in a specific type of repayment plan on that loan. And for most people, that's going to be an income-driven repayment plan or an IDR plan. Third, you need to work in public service, which we'll discuss and sort of makes sense. And finally, you need to have 120 qualifying payments, which is 10 years worth of monthly payments, 12 months times 10 years. So now let's quickly drill down through each of those so that you understand how the program generally works. So first, the right type of loan. So only direct loans as a type of federal student loan qualify for public service loan forgiveness. Direct loans have been the primary federal student loan since about 2010. So if you took out a loan since then, it is very likely a direct loan and it will already qualify. If you have older loans, some of which are called Federal Family Education Loans or FFEL or FEL loans, or if you have a Perkins loans, those don't directly qualify, but what you can do is convert them into a direct loan with the Department of Education through a process called consolidation. Consolidation is basically like refinancing through the federal government. You're trading in old loans for new loans that pay off the old loans. So even if you don't have a direct loan, you can consolidate it into a direct loan through that process. Now, normally when you do PSLF, and if you have an old loan that you need to convert into being a direct loan, once you have that direct loan that qualifies you, you don't get credit for the years in public service you worked before you had the direct loan. When you had that FFEL or Perkins loan, you don't get credit for those years. We're going to talk about in a couple of slides how that's currently not the case. You can grandfather in that work you did, but normally you have to start from scratch, which has been a huge failing of this program, and is something that, again, is being addressed currently by the government. So again, first requirement, you have to have a direct loan. If you don't have a direct loan, you can consolidate your non-direct loans into a qualifying direct loan. Second, your direct loan needs to be in the right repayment plan, which is generally going to be an income-driven repayment plan or an IDR repayment plan. These plans go by a couple of different names: income-based repayment or IBR, income contingent repayment, ICR, or pay-as-you-earn, PAYE, or repay, REPAYE. They all have slight variations, but are essentially the same thing, where they calculate your monthly payment based on your income. Normally, your monthly payment is based on how long, or rather, normally student loans default to a 10-year repayment plan. And they basically just chop up your loan by 10 years and 12 months, and that's what your monthly payment is. Under these plans, they say how much can you actually afford each month, and they set your monthly payment equal to about 10 or 15% of your take-home income. Your adjusted gross income. The goal is for it to be affordable. As a result of that, you have to pay for usually longer than 10 years to pay off your loan if you're paying under one of these IDR plans. There are a lot of, we could say a lot more about IDR plans. They often are so low, including $0, that folks don't actually cover the interest, and so they can see their loan get bigger and bigger and bigger. For that reason, if you are in an IDR plan for 20 or 25 years, depending on the plan, your loan will actually be forgiven after that time. So that's a long time. I don't want to sort of diminish how long that is. But if you need a more affordable option than your standard 10-year plan, IDR is usually the best route, and it is the qualifying plan for PSLF. So again, for PSLF, your monthly your loan needs to be in this plan. It doesn't actually matter how much you're paying on the plan. It just matters that you're in the right plan. So again, sometimes your IDR plan payment can result in $0 payments. It still counts as a payment, but that'll qualify that payment for PSLF credit. And although normally IDR forgiveness comes after 20 or 25 years, as I said, under PSLF, loan forgiveness comes after 10 years. So that's the same time frame as a standard repayment plan would have you pay off your loan. So the fact that your loan might be getting bigger and bigger and bigger is okay, because after 10 years, your goal is to pay it off. So direct loan type, income-driven repayment plan. There are some other plans, but I think for a broad audience like this, the general advice is to get on an income-driven repayment plan. All right, so third, to get public service loan forgiveness, you need to work in public service. You know, it seems common sense. That is specifically defined though. So it's important to understand also that to qualify, it really matters who your employer is, not what your role is. It really doesn't matter what type of job you have, it matters who you work for. So public service employers are categorized as a government organization, so federal, state, local, tribal, all of those count as a qualifying public service employer. 501c3 designated nonprofits, so those specific type of tax-exempt nonprofits, the 501c3s are considered qualifying public service employers, and certain other types of nonprofits, although there's not a general way to distinguish those other ones. It's a little bit more case by case. For-profit employers are not eligible, so that's important to keep in mind. But again, government, 501c3 nonprofit, and certain other nonprofits. You also have to work full-time for these employers, which is defined currently by the government as at least 30 hours a week or greater if your employer considers full-time to be greater than 30 hours a week. The rules account for things like teachers, who are a classic public service worker who should benefit from this plan. So if teachers work, maybe they don't work for 2 months over the summer, the rules account for that and say it should be 30 hours a week during the contract term of employment, right? So they understand that it's spread out over the year, it might be less, but that during the school year, as an example, it's at least 30 hours. You can also do this over multiple employers. So if you work part-time for 2 employers and they each count as a public service employer, both nonprofits, for instance, you can combine the weekly hours that you work. And if it's at least 30, that will count for that period of time. So that's an important thing to keep in mind for folks. And it doesn't have to be with the same employer at the same time. You can have two employers to get the aggregate 30. And finally, you need to make 120 of these qualifying payments. So that's payments on the right loan type, on the right payment plan, and with the correct employment. The payments don't have to be consecutive, but they do have to be full payments and on time. So if you leave public service and come back, you don't have to restart your 120 counter, right? You can pick back up where you were. So if you go to the private sector, if you take time off for family and you're not working, if you're laid off, as soon as you re-enter a qualifying public service job, as long as you have the right payment plan set up and the right loan, you can pick back up where you left off. So they don't have to be consecutive. They just have to be a total of 120 payments. And they also don't have to be, this is often a question we get, they don't have to be with the same employer. Again, you can bounce between jobs as long as each job itself qualifies. That's all that matters. You don't have to work for the district for 10 solid years, as an example. You can work for different qualifying employers. Okay. So that's the general regular program, but there have been some relevant changes to it. First, there have been some effects from COVID on PSLF. The major one is that for those folks whose loans have been under this payment pause, right? So since March of 2020, under the CARES Act, and then continued several times, the federal government has said that federal student loan borrowers don't have to make payments and they won't have interest accrued. That's not for every student loan borrower, but I think at this point you will know this applies to you. It's been almost 2 years since you've had to make a payment. Most recently, this payment pause was extended until May, and we'll talk more about that in a moment. Because of the origin of this pause from the CARES Act and this special circumstance, these pause months will count towards PSLF. Normally, if you call your servicer and say, hey, I'm having trouble financially, I need a couple months off, they can give you a forbearance or a deferment. These are both terms that say you don't have to make a payment. Normally, that wouldn't qualify because it's not a payment under an income-driven plan. However, this special COVID pause does count. So it satisfies that qualified payment plan criteria. You still need to have the right employer, you still need to have the right loan type, but your paused monthly payment will count as a monthly payment. However, if you have lost your job, retired, had your hours reduced, etc., the pause again might not count because you still have to have that full-time employment, which is important to note. Okay. So other changes. So last October, the federal government announced a special waiver that would address many of the issues that folks have experienced with PSLF over the years since it was started in 2007. Now, this is really a response to the fact that the program has not been working the way it was intended to. in 2017-18 as the first class of folks were eligible, because again, it's 10 years of payments, so 2007 to 2017 and early 18. And they started to apply, there was a literally 99% rejection rate, right? It was just not working. And this was in large part because there was poor communication and poor advice from servicers about these 4 requirements that we talked about. And specifically, folks didn't understand they needed to have a specific loan type, a direct loan, and they had to be on an income-driven repayment plan, an IDR plan. So a lot of people were working in public service, thought they were building towards loan forgiveness, and then found out at the end that they weren't, and they had to basically start all over. It was incredibly frustrating. We could have a whole separate, conversation about what the cleanup of that has looked like. But for today, and very excitingly, there is now, for a limited time period, a window to fix some of that. So the department will retroactively grant credit towards public service loan forgiveness to borrowers for months that previously didn't count under the program, either because they had the wrong loan type or because they were in the wrong repayment plan. So we're going to walk through what those changes are now to make sure folks understand how it affects and hopefully benefits them. Okay, so essentially what the waiver does, and we'll talk more about it in the next few slides, is that it gives public service workers credit towards loan forgiveness regardless of their loan type for any period of time since the program began in October of 2007, as long as they're in qualifying employment and their loan was in repayment. So it doesn't matter what plan it was in, it just matters that it was in repayment, which means that it wasn't in default, deferment, or forbearance. Again, deferment and forbearance are those terms I said where if you call and say, hey, I need a break for a few months, can I not make payments? And they let you do that. So as long as you were in repayment and in the right type of job, you'll get credit. It doesn't actually even matter whether you actually made a payment, just that your status was in repayment. So these credits will be given retroactively. So you can get credits for payments that in the past were either, you didn't even bother to apply because you thought they weren't eligible, or you were affirmatively told that your past months weren't eligible, but they'll retroactively get credit now. So I'm just going to sort of repeat this because it's super important, and this is the meat of what we want to make sure you understand today. So in short, for any months since October 2007 that a borrower had any type of federal loan, worked in qualifying public service, with a qualifying employer, and was not in default, deferment, forbearance, that borrower can get credit towards the 120 months needed for public service loan forgiveness. One additional caveat is that this special waiver does not count for what's called parent plus loans, federal loans you took out for your child or grandchild. Those loans can otherwise qualify for PSLF with some notes to make on that, but they don't benefit directly from this waiver period. We'll talk more today and in the Q&A about sort of ways to get a benefit for them, but they are not directly part of this waiver, this special look back that the government announced. Okay, so this waiver is not automatic, so it's really important for folks to know they have to do some work to get this credit. So normally PSLF requires borrowers have that specific direct loan type as discussed. Although the waiver will give credit based on any loan type, if you don't have a direct loan, you have to convert it to your loans to a direct loan through that process called consolidation that I mentioned earlier, which is that conversion. You're trading in your loans, you're refinancing your loans with the Department of Education. So you'll get credit for your old loans, but you have to turn them into a direct loan. Also, almost all borrowers, regardless of what loan type you have, will have to certify with the government your periods of employment with a qualified employer. They can't give you the credit for time that you worked if they don't know when you worked, essentially, right? So those are 2 steps folks need to take. Is some of you, if you don't have a direct loan, will have to convert it, and then almost everyone should go ahead and certify their employment. So importantly, the waiver ends on October 31st, 2022. That means any borrower who has to take these steps, change your loan type and certify your employment, has to do it by that date, by Halloween. This does not mean that you will necessarily get your new credit and or get loan forgiveness by that date. It's going to take time to process, and the government's doing this on a rolling basis. It just means you have to have done your role. You have to have filed the papers, and the government will continue to process things afterwards. We're already seeing people in the last 3 months that this program has been in effect, October to October, who have gotten their loans forgiven. Like, it is really happening. It just will take some time, especially as more folks file. Importantly, though, if you through this waiver get credits, you get credits that previously didn't count, but it's not quite 120. It's not the total that you need for forgiveness. You get to keep those. They're yours now, and you can keep building on them going forward. It's just that after October, to build on them and get more credit, towards 120, you'll need to follow those regular 4 program requirements we said at the beginning. So the direct loan, income-driven repayment, qualifying employment, and then you'll get closer to 120. So the waiver, will have a hard deadline of when it applies. Okay, so with that in mind, I just want to talk about 3 things that you should do to act on this, right? This is an exciting time. We're about a quarter of the way through this 12-month waiver period. What do you need to do? All right, so to figure out how this applies to you and what steps you should take, here are 3 things. We'll talk about each, but first is confirm that your past and present employers qualify as public service employers. Determine what loan types you take, you have, and take any steps necessary, like consolidating if you have to, if you don't have a direct loan, and then certify your employment. Okay, so first, you need to confirm your employer. Nothing about this employer requirement has changed during the waiver, right? You always have to have the qualifying employer, except for that. Normally, you have to still be in qualifying employment when you apply for and get forgiveness. So this is really tough for folks who lose their job, retire, transition into a non-qualified job. It just, it sort of traps you in a job if you're trying to get that employment. Now, during the waiver, that's not true. So you can apply now, even if you no longer have that qualifying employment, and get credit and even get forgiveness. But normally you have to keep that employer or that type of employment the entire time. So if you aren't sure whether your employer qualifies as a public service employer, there's a list that the Department of Education maintains. It's not exhaustive, but you can check it, and I'll show you screen grabs of how to do that in a couple of slides. But it is helpful. So it's through what's called the PSLF help tool, which you can access from the federal government's website. I'll show you that. It's the first step of the help tool is the list to check employers. So it's pretty easy to do, and you can do it quickly just to make sure that, if your employer doesn't qualify, it's really not worth you doing all these other steps. So that's the first thing you should be doing. All right, second step, you should see what kind of federal loans you have. Again, the 3 major loan types out there that folks have are direct loans, FEL, FFEL loans, and Perkins loans. Only direct loans already qualify. If you have these FEL or Perkins or other loans, you'll have to do that consolidation conversion process into a direct loan. And again, what's special about doing that now is normally the clock resets on your 10 years. But if you do it during this waiver period, you get credit for all the time you worked on the older loans, and your new loan will automatically start with as many years of eligible work that you had with the right payments. So that's, check what kind of loans you have and then consolidate if necessary. The final step for all public service workers is to certify your employment. Again, they can't give you credit if they don't know when you were working and who you worked for. The way you do this is through a form called the PSLF form. It used to be called the Employment Certification or ECF form. Borrowers can certify their employment using that PSLF help tool that I mentioned, and I'll show you in a moment. The same tool that you confirm your employers qualify. The tool will generate that form, and then you have to get your employer to sign it and then submit it via the instructions on the form to one of the servicers that handles this program. All right, so we're gonna look at examples of how to do all this now. We'll be pretty quick, and then we'll get to, I'll turn things back over to Ricardo in a couple minutes, and then we'll do some Q&A. So we just talked about these 3 steps. Now we're going to briefly go step by step to show you literally how to do these things, right? To make sure that you're PSLF eligible and that you're taking advantage of the waiver. Okay, so you need to log into studentaid.gov. Studentaid.gov is the central portal one-stop shop for your federal student loans. If you don't already have a username and login, you should create one. You can go in there and see all your information. So you're going to see it coming up again and again on this presentation over the next few minutes. So to confirm your employer, you're going to go to studentaid.gov. You'll see here a manage loans tab in a red box, and then when you hover over it, the menu comes down, and you'll see public service loan forgiveness in another box there on the screen in front of you. So you're going to click that public service loan forgiveness, and it'll bring you to a page that has a link to launch the PSLF help tool. Once you're in the tool, it'll guide you through the whole process, but the first step is that you can look up your employers. So you see here that sort of what that looks like. The way you look them up is through their employer identification number, their tax EIN number, and the dates of employment. If you don't know your employer's EIN number, you can ask your employer, you can look at your W-2, or for a lot of larger employers, you can just Google them. It's public information. Even government employers have EIN numbers. So I used to work for New York State. I put my info in here. You can see that 146013200. I search, it turns into state of New York, and you can see in that little box a green eligible sign. Now, again, these lists are not exhaustive. It's a list of employers that have already, for whose employees have already applied, right? So someone else from New York State had already applied and been deemed eligible. So some employers will come back and say ineligible, those for-profit employers that are not, don't count, in certain types of nonprofits. But you should, for the government employers and 501c3s, always get an eligible. Some will come back and say, like, we don't know, right? Because no one from your organization has applied. That's fine. If you think that your employer qualifies, you should just continue with the process. And then that database will get updated to show your employer once it's been processed. Okay. So that's how you do it. Identify your employer. You should do that for all of the employers you've had that you want to get credit for. And the reason we say go back to 2007 is that's when the program began. So you just won't get credit prior to 2007. If you graduated college in 2011, then that's when you got your first job or something. Then you should be going back to 2011. You don't need to go back to 2007 unless you were working at that time. All right. So now, how do you identify your loans? Again, we're going to go to studentaid.gov. You're going to hear this a lot. Identifying your loans can be confusing. Which type of loan you have, what are federal loans, what are private loans, it is very confusing. So I recommend everyone do this. So to see all your federal loans, you go to studentaid.gov. That'll only have federal loans, no private loans. If you don't know your login information, you can reset your password. If you don't have a login, you should create one. When you log in, you'll land on your dashboard and it'll have a list of all of your loans. Quite simply, if the loan title has the word direct in it, it's a direct loan. If it doesn't, it's not a direct loan. You will again see FFBL or federal family education loans as an alternative to a direct loan. But that the dashboard will have that information. You can also get a more granular look at your loans by clicking on view details and then download my loan data, which again are in red boxes on the screen in front of you. That will give you this sort of text file printout. It's a little bit hard to look at, honestly, but the blue arrows at the top point to a line that says loan type. So if you find that, you see that the two loans here are not direct loans, they're FFEL FEL loans. So we know that these loans would have to be consolidated into a direct loan if you want to get cancellation. Now this report, you see an image of it, this will reflect all of the loans you've ever had, the federal loans, including ones that have already been paid off, that have been consolidated already. So you might see some with zero balances. You don't need to worry about those. They're already paid off, right? So you just need to look at the ones that have a balance because those are the ones that you're going to want to get forgiveness for. Okay. Now, if you don't have direct loans, again, you'll have to consolidate them. So we're going to just show you how this works. No surprise here. We're going back to studentaid.gov. This is really your one-stop shop for everything. So you're again going to hover over manage loans. A drop-down menu will pop up, and then you can select the consolidate my loans shown here with the red box around it. Once you land on that page, you can launch the consolidation application. You can do it online. It really takes no more than 15 minutes. So the application will guide you through each of the steps, which will include selecting which loans you want to consolidate, confirming the amount and rate of the new loans. The new loans interest rate will be a weighted average of your older loans. So you can't consolidate to sort of take advantage of new lower rates. It's really about reflecting the loans that you're consolidating into the new loan. You'll also select your payment plan and servicer, and then you can sign for the loan online. Now, a tip that is specific to this waiver period is that if you have a mix of older loans and newer loans, by which I mean loans that are closer to 10 years of being in repayment, that'll get you that PSLF 10 years forgiveness, and loans that are not as close to 10 years. So maybe you have undergraduate debt and you have graduate debt, but all of your work has been in public service. So those undergrad loans are closer to being forgiven. If you consolidate them all together during this waiver, that new loan will get as much credit as that older of the two loans of your older loans did. So effectively, that new loan will be forgiven on the timeline of your undergrad debt for this example, right? Even though bundled up in there are your graduate school loans that are a little bit younger and farther away from forgiveness. Now, this isn't like a loophole or trick. The government has just said to operationalize this waiver, they have made the decision to say, we're going to forgive consolidated loans on the basis of the oldest underlying loan, right? So in this instance, if you have a mix of loans, if you consolidate them together, even if they were both direct loans and you wouldn't normally have to consolidate a direct loan, the benefit is that once that new loan is forgiven, all of the loans are forgiven. So there is a way here, if you have a mix of older and newer loans, including direct loans, for you to get forgiveness on all of them faster than you would have individually for any one of them. Okay. So remember, for the PSLF program, you do need to be enrolled in an income-driven repayment plan. When you consolidate your loan, it'll ask you what payment plan you want to be on. It's probably, for most folks, a good idea to select an IDR plan. That way, once your new loan enters repayment, you're already good to go if you need to accrue more. Now, these consolidated loans will be direct loans, which means that they are going to be covered by this payment pause we're still on. So if you consolidate your loans right now, the new loan will be issued in 30 to 40 days. Payments don't resume until May, so there'll be that payment pause for you. If the payment pause is extended, these new consolidated loans will be part of that extension. So for some of you, picking the new plan won't really matter because you're going to get your loans forgiven. And for some of you, you won't have to make a payment on a new plan for a while anyway. But it's still a good idea to pick a plan that will continue to qualify for PSLF in case you do need to accrue more and more credits towards the 120. Okay. Finally, let's review how to certify your employment. That's that final step, right? The government can't give you credit if it doesn't know where you were working and how long you were working there. Studentaid.gov, I said you were going to hear about this a lot. We're going to basically repeat the same steps to confirm your employers. We're going to go back to the PSLF help tool, manage loans, public service loan forgiveness, launch the tool, enter your employers, the EIN number, and the times that you were there. Again, you'll remember this slide. And then the PSLF help tool will guide you through the remaining steps, including identifying which loans you want to include in loan forgiveness. Once you complete each of the steps in the tool, it'll generate a PDF for you. You can see an example of the PDF on the screen here. And that's the form that you use to certify your employment. Again, this form is called currently a PSLF form. It used to be called an Employment Certification Form, or an ECF. They recently changed that. Once you have the form, you're going to want to give it to your employer so that they can sign off on the fact that they were your employer, how long you worked there, et cetera, that you were full-time. Once the form is signed, you have to submit it to the designated federal student loan servicer for processing. The instructions are on the form itself. And again, everyone has to submit a form that reflects all their work that they want credit for by this October 31st, 2022 deadline to get credit under the waiver, right? So I really encourage folks to file these forms if you haven't already. It is true, you may have heard this, that the dedicated servicer for PSLF, which is currently called FedLoan, it's a company that their business name is FedLoan, they're called FIA, is their legal name. They are transitioning out, but until you hear otherwise, you should continue to think of them as a designated servicer. The Department of Education will update their forms if they want you to start sending it to the replacement servicer. If you're already with FedLoan, it'll automatically transition you over to that new servicer. Okay, so what does the actual process look like, right? So in general, this is the general process and it applies to the waiver too. So FedLoan servicing, FIA, which I just mentioned, is currently the dedicated servicer. So if you want PSLF, you're going to need to send your PSLF form to FIA following the submission instructions on the form. They'll look, and if you have a qualifying loan, your loan will then be transferred from whoever your current servicer is, Navient, Nelnet, Mohila, over to FedLoan for servicing. They'll then run through the other requirements and will sign off on your form. They'll let you know, all right, here's the amount of credits you got based on that form. Or they'll say you don't get any credit because there was this issue, whatever it is. You don't technically have to certify your employment until you're seeking seeking forgiveness. So after 10 years, it is a good idea though to do it on an annual basis. That way, annually, you get credit building towards 120. And if there's an issue, you can catch it early and address it moving forward. Maybe there was a mistake, but maybe you need to switch loan type, or maybe you need to switch repayment type. Again, that's for the waiver. The waiver sort of fixes that, but in general, it's good to do this annual certification so that you identify any potential issues early. Okay. So that is the general process. We're going to pivot a little bit from PSLF and talk about return to repayment, and then I'm going to wrap up and hand things over to Ricardo before we do Q&A. So I mentioned a couple of times now, there's this payment pause, March of 2020, currently through April. So May 1 of 2022 is when federal student loan payments are going to resume. There are some of you who might have been making payments the whole time and didn't get the pause. That's a subset of federal student loan borrowers, but most of them have been under this pause. And again, you should know who you are at this point. Payment's going to resume May 1st. It's been extended a couple of times. It could be extended again, but we should act as if payments are going to start. So what you're going to need to do is make sure that whatever resumes for you in May is going to be affordable. Whatever you were paying in February of 2020 should be the same plan that they'll charge you on in May of 2022, but people's circumstances have changed. People's jobs have changed, they've moved, et cetera. So you should take time now to prepare yourself for when payments resume, if that is in May. And you should do that with keeping PSLF eligibility in mind. So the Department of Education's Federal Student Aid Office has a loan simulator. You can just Google FSA loan simulator and you'll find it. It is on studentaid.gov though. And you can punch in your own info and find out what your monthly payment would look like under different scenarios. If you are gonna have to enroll in an income-driven repayment plan, which you may not have already done, you should do that soon. That's not going to trigger your payment starting again, but you want to be positioned well for that payment plan to be in place. IDR plans do require annual recertification, but folks won't have to recertify from 2020 until after payments have resumed. So if your repayment certification was going to be, August of 2020, but the pause is already in effect, you don't need to recertify yet. You'll get a notice about it. But if you want to enter repayment with an IDR plan that you weren't previously on, you should take that step now. Also, auto debit has been turned off. So if you want to do auto debit again, you should re-enroll. Everyone should double check on studentaid.gov and with their servicer that their contact information is up to date. Again, folks have moved, things have happened. You want to make sure you're getting notices and getting them in a timely fashion. Finally, avoid scams. This is whenever there's a government announcement, it's like a bat signal for scammers, right? They're going to come out, they're going to use elements of the announcement that you may have seen in headlines, but didn't have the chance to really absorb or drill down on. And they'll say things like the PSLF waiver, and you're like, oh yeah, I did hear about that, but really they're just trying to get your money from you. The government will never really call you. That's not how the government communicates. They're going to use whatever studentaid.gov login you have. They're going to talk through your servicer via email and things like that. So avoid scams, be skeptical. If you get a phone call, they say it's your servicer, you should hang up and you should call back the servicer's number that you have on your billing statements. Don't call back the number they give you on the phone because it could be their scam number, and just verify, right? So be cautious. Okay, final takeaways before I hand it over to Ricardo for all the things we've talked about. Special waiver right now. Credits for months that didn't previously qualify under PSLF can now qualify. The deadline to get this benefit is October 31st of this year. So you're going to have to maybe consolidate and definitely submit your certification form. To do that, you should confirm your employer, confirm your loan type, and consolidate if necessary, and submit your PSLF form. You should prepare for repayment resuming. Maybe it's in May, maybe it's later, by double checking that your plan is affordable and enrolling in an IDR plan if it's not going to be affordable. Update your contact info. Avoid scammers, and if you see something, your servicers, jerking you around, or a scammer contacts you, you should file a complaint with the Office of the Attorney General and with DISB. If something's happening to you, it's almost definitely happening to someone else. So very much a see something, say something situation here. All right, so I'm going to put us on this slide and then let Ricardo talk a bit about his upcoming program, and then we're going to take Q&A. So Ricardo, take it away.
Thanks so much, Winston. I want to thank you for all the information that you shared today. And even before I get into the upcoming program on higher education for Black History Month, I want to remind everyone that it's so important that they do not fall victim to any of the scam callers who are reaching out about the Biden loan forgiveness program. People who are posting things on social media. I've talked with so many people who have paid $500 for someone else to complete paperwork that they could do themselves. And I know how challenging this can be. I know many of you have attempted to complete this process unsuccessfully in the past. You may be a little bit reticent about it, but I want you to know that I am here to support you in moving forward this process. I've seen many residents cancel their student loan debt by going through this process. It is surprisingly straightforward and easy, and with a 35-minute conversation in a virtual meeting, we can get through the process together. So please know that there's no reason to pay anyone for these types of services. Now, coming up for the month of February, I am sponsoring a 3-part higher education series so that you can prepare your children and your families for college and to avoid extending the student loan debt crisis another generation. So I see over 500 people here today. I want you to take a picture of the bit link, to save the QR code and register for the higher education series next month. The first week, February 10th from 6 to 7 p.m. will be on completing the FAFSA. Many of you, maybe you've not completed the FAFSA, maybe you're not sure, maybe you need to make some updates or changes to your FAFSA based on changes in family size or income. Come to the program, listen, and get some information to help you take advantage of free grants and aid. The second week, February 17th, will be on scholarships. That will be sponsored by the Thurgood Marshall College Fund. Tremendous information available to help your children go to school without incurring student loan debt. That will also be from 6 to 7 p.m. The last week, February 24th, is an exceptionally great program that I'm having, and I will be speaking directly to parents about things that you can do to avoid going into debt for your children. Navigating Parent Plus loans, really understanding private loans, Parent Plus loans, and other money that may be available to your children. I want to help you help yourself by not finding yourself at the end of your career going into retirement saddled with $30,000, $40,000, $50,000 in student loan debt, helping your children. So please, please, please take a picture of this link. Join us in February. Take a picture of the QR code, register, share it with your friends, share it on your social media. I am here to help you help yourselves and your families and your communities avoid extending the student loan debt crisis another generation. And that is the goal of DISB with promoting the Black History Month Higher Education series next month. Having said that, we will move on to take your questions and answers. And so let's see. And I will also leave up for the duration of the program our contact information. Again, I'm Ricardo Jefferson, your student loan ombudsman. You can contact me at dcloanhelp@dc.gov. You can also visit my webpage. You will also see monthly scholarships that are posted there. And you will also find helpful links to other information and other webinars in the past. Many of you have asked if this presentation will be made available to you. Yes, it will be. We will put the video link in a box. It will also be available on my website. And if you'd like to have it emailed to you in PDF, reach out to me at dcloanhelp@dc.gov, and I'll be happy to forward that information to you. Thanks again, and let's get started with our questions. And I want to look in the box. So the next question I see is the one I'm going to offer. Winston, one question I saw was this. Is there an income cap on income-driven repayment plans? You know, a lot of district residents, unfortunately, appear to be higher income, but the reality is, with life being as expensive as it is in our region, people still have a hard time making it. So can you speak a little bit about income caps and seeking to get into an income-driven repayment plan and how that works?
Yeah, so there is not an income cap on the income-driven repayment, on any of the income-driven repayment programs. So there are going to be folks for whom 10 or 15% of their adjusted gross income might actually be more expensive than the standard plan if they were just to pay off the standard plan, which again is how much you pay to pay down your loans over 10 years. That's not going to be true for everyone. It's, you know, folks should use that loan simulator, payment simulator on studentaid.gov, or just Google FSA loan simulator. But some folks, particularly if they're higher income, again, it looks at income, not at wealth, right? It doesn't look at, what do you have at the end of the day? It looks at what are you taking home. It doesn't take your expenses into account quite that way. So unfortunately, sometimes IDR plans are still unaffordable or are more than the standard plan. But for many folks, it will work, and it is one of the ways to qualify for PSLF.
Okay. And the next question is about Parent Plus loans. Can people get public service loan forgiveness for Parent Plus loans? And how can the waiver potentially help people who have public service loans, who have Parent Plus loans, as well as older underlying loans?
Yeah, so for Parent Plus loans under the regular public service loan forgiveness program, Parent Plus loans can qualify, but what you're going to have to do is consolidate them to get access to those income-driven repayment plans. Unfortunately, not all loans have access to all repayment plans, but if you consolidate your Parent Plus loans, you're going to open up more options. So that's one way for them to qualify regularly during PSLF. And again, it's based on you, the parent, your job, not on your child's job. If you pay for your kid's school and then they go into public service, that's great for them and their loans, but these are your loans you took out for them. Now, the Parent Plus loans were not given the waiver benefits. Unfortunately, the waiver is just going to be for loans you took out for yourself. But there is that sort of loophole that I mentioned with older and newer loans, by which I mean, if you have other loans, FEL, Perkins, direct loans that you took out for yourself, if you can consolidate those with your Parent Plus loans, that new loan will get forgiven on the basis of the FEL, direct, Perkins loan, the other loans there, and will take the Parent Plus loans with them. Again, the government knows this. This isn't a trick. They've been very clear in their instructions to all their contractors that if someone has a Parent Plus loan bundled in there, it is okay and they should forgive it, but you have to have that other type of loan to combine with your Parent Plus loan, unfortunately.
Great. So thanks, Winston. So just to kind of cap that off, the reality is if you have a Parent Plus loan, as well as your own loans that were older than your Parent Plus loan, you can consolidate that Parent Plus loan with your loans. And in that way, the older loan, your underlying loans, whether they were graduate or undergraduate, will be the measuring tool by which the government will use to forgive you under the waiver program. And remember, this is a one-year program. It's going to expire on October 31st of 2022. So make sure that you do what you need to do to take advantage of this special time. Another question I've seen repeatedly is, do government contractors fall under this umbrella? Winston, if you could speak to that.
So it depends on who. So again, PSLF will always look at who is your employer, who is paying your paycheck. So government contractors is a great example of where it gets a little murky. If you are a government contractor working for the Department of Defense, for instance, if you work directly for the Department of Defense, that will count because the Department of Defense is a government employer. But if you're a contractor, it's going to depend on who's the contracting company, right? Who's the company paying your check and who got the contract. If that's a nonprofit that qualifies, then you'll qualify, and sometimes that's true, right? Plenty of there are examples of that. However, many, if not all, contractors are for-profit and therefore will not qualify, even though they're doing the same exact job as someone sitting next to them who is a direct employee of the Department of Defense. That's not part of the waiver. That's just part of the regular rules for PSLF. There's been a lot of advocacy to change that because it's not written into law. It's a decision the Department of Education made a few years ago. But currently the state it's not that contractors don't qualify, it's that, well, what is the contractor company? Is it a for-profit company? In which case it won't qualify. Is it a nonprofit 501c3? In which case it would qualify.
And Winston, just to extend this a bit further, what about people who may be reservist government workers? For example, there are folks who are on FEMA's list of to be deployed, for example, in the event of a national emergency in a particular place. So they have been hired, but they're on reserve. Do they qualify?
It's going to depend on every scenario, but what it's frankly ultimately going to come down to is, will FEMA, or whoever they report to actually, will that employer be willing to sign a form that says they work full-time as defined as 30 hours a week, right? So I imagine that if you're just on a list and can be called in, that time when you're not being called in does not count as employment, so you wouldn't get credit for those months. But if you are deployed, and this is again sort of hypothetical, but if you are deployed at some point, you're actively working at that point, right? And so you could get credit for those months. So that might be a scenario where, again, maybe it's a part-time, full-time combining hours, or a scenario where for certain months you get credit, for certain months you don't credit, then you get credit again. But it's going to come down to whether or not that agency will sign off on you having been a full-time employee for a certain period of time.
Right. So in a scenario like this, the best thing to do is to go forward and do everything you can to get all of those potential employers to complete certification, because nothing beats a failure but a try, right, Winston?
Yeah, there is no, although, and I think I saw this in the chat too, There's no downside to filing a PSLF form. There's just no downside, right? It does not hurt other than the time you spend to do it. For the consolidation, that's why we put, check your employer first, consolidate if necessary. For the consolidation, there are potential downsides, which is that if you have an older FFEL loan and you have some interest rate benefit, an interest rate reduction benefit or something, that won't necessarily carry over. So you might see a slight increase in your interest rate. And if you were trying to get that 20 or 25-year timeline income-driven repayment forgiveness, the waiver doesn't carry that over. So when you get your new loan, you'll grandfather in your PSLF credit, but you won't grandfather in your IDR credit. I know this sounds like totally psychotically confusing, right? I don't know why the government does this, but so that's a potential downside, is that if for some reason the PSLF thing doesn't work out and you were banking on IDR forgiveness, you've reset your clock there. But that's why we encourage everyone to confirm your employer first before you do anything, because for the IDR waiver, it's really going to be making sure that your employer qualified and that you weren't in deferment forbearance or default to make sure you get credits.
Great, Winston. And another good question. Can you just highlight for people, can private education loans qualify for PSLF or the waiver? And as a caveat to that, could the private loans possibly be consolidated into their federal loans in the way that you talked about the old FFEL loans being consolidated into direct loans to come into compliance?
So the short answers are unfortunately no and no. So private student loans are not eligible for public service loan forgiveness. The way that public service loan forgiveness works is basically the government already owns your loans, and so they're just canceling them, right? They're not sending money to someone to pay it down. Private student loans are owed to a private lender, right? So the government would have to send that person money, and that's just sort of outside the scope of the government program. So private student loans themselves do not count for public service loan forgiveness. It has to be a federal student loan. And if you refinanced on the private market, let's say you had a federal student loan and then you saw really good rates on the private market and decided to refinance there, which is sort of like consolidating, right? But it's out on the private market. There's no way to undo that. You just now have a private student loan and it won't qualify. Nor, to the end of your question, can you consolidate a private student loan into a federal student loan. You can only, with the federal government, consolidate existing federal loans into a new type of federal loan.
Thanks. And just another question that keeps coming up. If your loan qualified for repayment during the COVID pause, do the months count toward the 120 payments?
Yes. So during the pause, as long as you have the right employer and your loan, wasn't in default, if you started before in default, that has yet to be fixed. But if you have so only folks who have, except for a very, very small population, only folks who have direct loans are getting that pause anyway. So you're already sort of halfway there, right? But the last 2 years of payment pause will count as your qualifying payment. So as long as you also have the qualifying employment, that will give you credit towards PSLF. And if it extends longer, that'll continue too, right? So it's been, I say 2 years, that's what it's been, but so far, so good.
Okay. What about if people took periods of deferment since 2007? How are those treated for purposes of public service loan forgiveness or the waiver?
Yeah. So again, deferment and forbearance are, times when you're not required to make payments. It's not that you have a $0 payment, it's that you're not required to make payments. Currently, the waiver is not giving credit for forbearance or deferment. There are some types of deferments, like military deployment deferment. I'm sorry. So if you're deployed in the armed forces, your loans can go into deferment. The government is going to give credit towards that, but they are not giving credit towards deferment or forbearance generally. Unfortunately, there's been a big advocacy push to do this in large part, and I think I saw questions about this. There were some servicers who were directing folks towards forbearances or deferments when they would have been better suited getting into an affordable income-driven repayment plan. This is something called steering. They steered you towards one thing instead of the longer-term IDR plan, and in doing so, they put you in a forbearance or deferment that isn't going to count for PSLF. And unfortunately, that's the state of it right now. It just won't count. That is time that was taken from you, unfortunately. Again, there's a lot of advocacy to change that and a lot of current conversations with government officials to change that. So stay tuned. It's unclear how that'll resolve, but But currently you cannot get credit if you were in a deferment or forbearance unless you were part of that special military deferment class.
This is a loan type question. Could you explain the difference between direct subsidized and direct unsubsidized loans?
Yeah. For the purpose of, I'll first just say, for the purpose of PSLF, it doesn't matter. They're a direct loan, they're a direct loan. The very short and simple difference between these loans is that for periods when you're not required to make payments, such as when you're in school, in the 6-month grace period after you finish school, or if you go into certain deferments or forbearances, for the subsidized loans, the government will pay the interest that would be accruing during that time. Because just because you don't have to make a payment doesn't mean interest isn't accruing. So on a subsidized loan, the government will pay the interest so that effectively your balance is frozen during those times. For an unsubsidized loan, that's not the case. And so the balance will be growing because the interest is accruing during those periods when you're not required to make a payment. There's some nuance there, but that's the high, 50,000 foot explanation. But again, for PSLF, it doesn't matter. It just matters whether they're a direct subsidized and unsubsidized loan.
So here's an interesting question. What if you can't afford the consolidated payment amount? Is there any room for negotiation on the income-driven repayment plan? So you've gone through everything and you've been given an income-driven repayment plan and you're looking at it and you say, I can't pay this,
Yeah, so the short answer is this is a deeply imperfect system, right? Like a deeply fraught and broken and imperfect system. And there's a lot of folks working very hard to try to fix it, but it hasn't been fixed yet. So there are people who just won't have good options. And it really is a very tough pill to swallow. And it's really terrible news to have to give to individual people that there just isn't going to be a more affordable option. If you really can't afford your income-driven repayment and you, and don't want to go into default and sort of want to make payments, there are other plans such as an extended or a graduated plan where you can start with potentially, you have to do the calculation and run the simulator to see what's going to be true for you. Start with lower payments and sort of escalate, or start with lower payments and pay that lower amount for a long period of time, including up to 30 years, sort of spread it out. But for PSLF purposes, you ultimately, currently under the rules, need to be in either the standard plan or one of these IDR plans or very specific certain other options. But in terms of affordability, you just got to run the numbers. And if there's not something that works for you, there are very few other options.
Okay. And here's a good one to just kind of review one more time at a high level, Winston. What should people be doing strategically before May of 2022, just to make sure that their financial house is in order in anticipation of return to repayment?
So you definitely want to make sure your contact information is up to date. Get that login on studentaid.gov, check with your servicer. You want to double check what your payments were in February before 2020, when the last time you made a payment, because it should be the same when payments resume. And if that's not affordable for you, you're going to want to use the payment simulator and look into what payment options are available to you that are affordable. Keep PSLF in mind, because if you're going for PSLF, you're going to want that to be an income-driven repayment plan. Again, hoping it's, affordability somewhat separate. To qualify, it's going to need to be income-driven repayment. And then I think those are the main ones, right? Update your contact information, confirm affordability. If you want auto debits, you should re-enroll for that, and then be super vigilant and avoid any scammers. The payment simulator I see in the chat, if you Google FSA student loan simulator, it'll be the first hit, but it's available through studentaid.gov.
Winston, one of the most infuriating things that people go through is trying to understand, why is it that 10, 15 years after finishing school, they owe so much more than they originally borrowed? Without going into anyone's specific circumstances or facts, can you briefly explain the cycle of capitalization, negative amortization that results from periods of deferment and things of that sort, and what happens, especially when we're under an income-driven repayment plan? Just explain why these plans don't result in the loans going down, and notwithstanding that, why it's still in the interest of government workers to remain in those plans.
Yeah. So basically what happens is whenever you have a lower monthly payment that you're paying the full lower amount, right? You're not in default, you're not delinquent. They're saying, pay us this and you're paying it. But if it's lower, then there's a chance that it won't even cover the interest on your loans. If you're not covering the total interest for your monthly payment, it continuously accrues. And if you're not paying off the interest as it accrues, the interest will sort of stack up. And every once in a while, it can do something called capitalize, where the interest gets folded into the principal. It's like an interest on interest, right? So now you're getting interest on this larger principal amount. Sometimes the interest won't capitalize and it'll just sit there as an interest amount, growing and growing, but the principal will stay the same. But the idea is whenever you're paying a reduced monthly payment, you might not be covering the whole interest, and that can happen. And that whole, you use this term negative amortization. It's this idea that your loan's going to grow and grow. Normally you want to amortize and pay down over time, but this is growing over time, right? So that is very scary. It can cause a lot of distress for folks financially and emotionally to see that happening. The reason why it can be not totally terrible is because if you are doing this with the goal of PSLF, after 10 years, the entire thing will be forgiven. There is no cap on what can be forgiven as long as everything qualifies. Even if you're not doing PSLF, in 20 or 25 years, the whole thing will be forgiven. Now, I don't want to point to that because 20, 25 years is a really long time to live with that. And the rates are not good at people who successfully get that. But in theory, on paper, and let's just agree that that's not perfect, you can get it ultimately forgiven. So if you need a lower payment to make your monthly payments and you see your account growing, that can be very scary, but there are ways to not have to ultimately pay the whole accrued amount. You just have to make sure you're getting the correct information and planning really carefully.
That's so important, Winston, because it is truly daunting for people to see those numbers. And just understand that, when I meet with people, I tell them the whole goal of the public service loan forgiveness income-driven repayment plan is not to pay more than you need to pay to be compliant. And so that likely will result in what you see as an ever-increasing debt burden. As long as you're committed to remaining in the employment that is making you eligible to receive public service loan forgiveness, and you complete the requisite period of time, that amount will be forgiven ultimately without any tax consequences, which is what really makes it important. There are several concerns and questions about where do I go as a DC employee to get my employment certified. You should go to your agency human resources office, and your respective agency human resources person will support you in that effort. I have absolutely no doubt. We are out of time, everyone. I want to thank you for your thoughtful questions. I want to thank Winston Berkman-Breen and the Student Borrower Protection Center for providing this excellent content. I want to thank our partners at the Office of Attorney General, Lauren Haggerty and Laura Berkman for supporting us today. And I want to encourage any of you who have issues or concerns to reach out to me, Ricardo Jefferson, the Student Loan Ombudsman. You can email me at dcloanhelp@dc.gov. You can schedule an appointment. I will make myself available to support you in going through the online process to complete the public service loan forgiveness waiver using the help tool. We can do it virtually on Teams. You can share your screen and we can kind of laugh, cry, and talk about it together. It takes some time, but I will escort you through the process virtually. And so I would only ask that you be patient because I have many appointments and there were a lot of people here today. So, it's going to take some time, but we can do this. This is a really great opportunity that the federal government has provided to help people resolve their student loan debt and also just improve our circumstances. And so if you work on this and get this done by October 31st of 2022, it's life transforming, and I've seen it happen. And so let's do it. If you would like to hear this information again, participate. We have another seminar next week. And so if registration is available, I encourage you to register again. And also, I want to go back and suggest that you check out the higher education series next month. Let's not have your children repeating this cycle of student loan debt. Come on out and join the higher education series. Get some tips on completing an effective FAFSA, right? How to really compete for scholarship dollars and do it the right way. Every free dollar you get is a dollar that you don't have to spend out of your pockets. And last but not least, come to the Parent Week and get some special information that parents need to know to avoid pitfalls and having to take your retirement funds to pay Parent Plus loans to the government. So having said that, I want to thank everyone. I'll turn it back over to Lauren Haggerty and let her wrap up the session. Have a good afternoon.